Oh, aloha. Hello, folks. Welcome to another beautiful sunset. And this is Pablo's investment analysis. So we'll go straight into it and look at some of the markets. Basically, we're going to be looking at, say, what are the odds of a recession? Of course, a recession is obviously very important. And if a recession was to happen, then you would basically have a market crash in both Bitcoin and the SP 500. It would probably start with the SP 500, but we've all seen if stocks were to crash, if the Nasdaq was to crash, then what happens to Bitcoin? I mean, SP 500 hasn't even gone into bear market yet. Nasdaq's barely gone down 20%, and Bitcoin's already gone down 55%. So that goes to show you how important it is to get this right. Okay, so here's something I want to show you folks. Here's something that can predict. I mean, it can predict basically a recession with 100% accuracy. It's done so every time, right? And it's just given off, or very close to giving off, a very big signal. So I think we should know about this. Keep in mind, this is published on July 1st, 2019, and it's saying the yield curve has just been triggered. Is a recession looming on the horizon? Okay, keep this in mind. Let's look at how well it works, right? And remember, if we have one of these gray bars, which is a recession, if we have one of those, that means basically US economy will tip into recession, and US stock market would basically go into recession about 4 to 9 months beforehand. Okay, so basically, most people are wondering why we're talking about this. Does this matter? I mean, don't we just want to talk about Bitcoins and, crypto and stocks? I am telling you, this is what matters. This gives you ahead of the time, a few months ahead of the time, ahead of the curve. This is what the whales look at. If they want to go in, or if they want to pull out, if they want to accumulate, or if they want to distribute all their coins. And all the retailers are left holding the bag each time. This is what they look at. So basically, each time this gray zone happens, right? These are recessions in the US, when US GDP goes backwards. And you can see it's happened all the way from the 70s up till now. I mean, it's happened before, but this red indicator tells us that's the yield curve inversion. See this line here, it's 0. Every time it dips below 0, within a year or two, US economy goes into recession. And you're still wondering, oh, why is that important? Okay, let's just look at the last 3 times it did this. Once was just before the year 2000. What happened to Bitcoin wasn't even born back then, but what happened to the stock market? Now, here's the thing. If I was to tell you, SP 500 and the Nasdaq has only gone down, the SP 500 has only gone down 12% this time. Nasdaq gone down, 20%, and Bitcoin's already down huge. This is we might as well look at something called, a better example would be look at the Nasdaq, because the Nasdaq is much more highly correlated with Bitcoin. Okay, so let's look what the Nasdaq did in 2000. I'm sure for the older guys in the audience, you already know the answer, because what happened in the year 2000 is basically the dot-com crash. Now, look at this. Nasdaq went down from 4,800 down to 800. So that's like a 80%, 85% crash. Basically, right now, the Nasdaq has only gone down 20%, right? See, we're about here. And basically, Bitcoin's already gone down 53%. I'm not saying it's going to go straight down. If you watch my last 2 videos, I'm not saying that, right? I'm saying there's still a chance for a big bounce in the markets. Might even make a new all-time high for stocks as well. I'm not sure about Bitcoin. But you can see that when the signal came, the top was April 2000, right? Let's have a look at this again. Let's have a look at when the signal came. The signal came right on just before 2000. And then the recession came in 2001, right? And the Nasdaq topped and crashed here. Bitcoin wasn't around back then, but if Bitcoin was around, imagine what would have happened, right? Just look at how Bitcoin and the Nasdaq are correlated right now. And this signal came ahead of the recession. Now, this is the year 2008, 2009, where the recession happened. And this signal again came below zero. See below zero, the red line? It came before, about 2 years before. And see, it went below zero. So it gave us the signal in end of 2006. Let's have a look at what the Nasdaq and stock market did in 2006. So basically, 2006. This is 2006. 2007. That's the top, right? So then basically, look at this drop. Nasdaq went down from 2,200 down to 1,000. So again, it's like a 60% drop, right? 55, 60% drop. If Nasdaq does that, what would happen to Bitcoin? Now, this is only in 2008, and because Bitcoin wasn't around back then, and because the Nasdaq crashed this much, that's why the government and the US economy crashed this much. That's why the US government started printing money. That's why all this printing money, government's printing money, we got to buy Bitcoin. That's how this whole movement started, right? A lot of people don't understand, don't know what's going on, and they refuse to learn. They're going to be bag holders in 6 to 12 months when the market does do something pretty drastic. So basically, let's see if this theory works in real time or not. Now, this article, as I just said, was written in 2019, July 1st, 2019. It's saying, okay, this yield curve has triggered again. Will it work again? So in 2019, they've had this signal again. Did it work again? Has there been a recession since 2019 to 2022, where we are right now? Okay, let's have a look. What happened in 2019? Now, 2019 is basically, July 2019 is basically here, right? July 2019. Okay, that's July 2019, right? It gave the signal. It says market has inverted. Nasdaq kept on going up, and then boom, there's this crash, right? What was this crash? That was the COVID crash, bottoming in March 2020. So there is a lag, but what it means is it tells you a few months in advance, or even up to a year in advance, what's going to happen with the US economy. But now Bitcoin is born. What happened to Bitcoin? Bitcoin basically went from 9,400, right? 9,400 down to, basically, I remember the low was something like $3,000 on the crash. It spiked much lower than that. I mean, if we just look at Bitcoin in 2019, there's got to be a better chart than this. Okay, let's use this Bitcoin chart. 2019, or 2020. Okay, during the crash, the high here was 10,500. The low was 3,700. Yeah, 3,700, as you can see. So basically, Bitcoin made a 67% crash. This is why it's important. So this, you could argue, maybe couldn't predict the COVID recession, but somehow it did flash a signal saying within 1 year we'll get a recession. And of course, COVID came and crashed the market, and there was another recession. I'm not saying it got it right. I'm not saying it got it wrong, but it did say another recession is going to happen. Another recession did happen, even though it was because of COVID. And Bitcoin went down 67%. Nasdaq went down 60%. So basically, it's I'm trying to say this is an important indicator. Now, it's again giving a big signal, and let's have a look at this. Okay, what do we mean by yield curve inversion? What we mean by yield curve inversion is basically, see here, top of the screen here, it says US 10-year yield minus US 2-year yield. Now, what that means is basically this. So, for example, if you are, say, borrowing money, right? If the United States government is borrowing money. So what they do is they say, we borrow money from you for 10 years, right? That's a 10-year bond. And they have to keep on paying you interest, just like if you borrow money from a bank. We have to pay you back every every year or every half a year, whatever the coupon is, for the next 10 years. Or we can borrow money from you for 2 years. That's a US government 2-year bond. Now, 2-year, imagine if you were to graph it, right? So the 2-year bond is here and the 10-year bond is here, right? So if you were to borrow someone money, your cousin, your father, your best friend, your girlfriend, whatever it is, if you were to borrow them serious money like $10,000, $20,000, $50,000, however much it is for you, don't you think that if you were to borrow them for 2 years, there's less risk than if you were to borrow the money for 10 years, right? So therefore, the longer the curve, the duration, the longer it is, the higher the interest rate, right? To compensate for the fact you're taking higher risks. So isn't that normal? Even if you're borrowing money to Uncle Sam, to the US government, if say China or Saudi Arabia is buying United States government bonds and they say, here's $1 trillion, give me like some interest rates on it. Then for the 2-year, it would be something like, let's say, it would be something like, say, 1.5%. But if you want me to take extra risk and lend Uncle Sam 10 years, then I want 2%, 2.5%, maybe 3%. And that difference between the 2 and the 10 year is what they call the yield curve. It doesn't have to be just between the 2-year and the 10-year. It can actually be between, say, the 2 to 5 year, 5 year to 7 year, 7 year to 9 year. It can be all over the place. But the 2-year and the 10-year is the one that everybody looks at, that all of Wall Street looks at. So here, the US 2 to 10-year, and it's what we've shown on this chart. This is the US 2-year minus the US 10-year. See, they even say it here, the 10-year spread, right? 10-year spread compared to the 2-year. Essentially, every time it goes below zero, US economy goes into major recession. So here we are now. This is the US 2-year yield on its own, right? Which is the interest rate you would lend to Uncle Sam for 10 years. It's at 2.18 right now, right? And it's obviously, as we can see, smashed through a major resistance at 2%. So already it's going up, but we know that the 2-year has been smashing it, has been going through very quickly. So if we were to use 10-year minus 2-year, as we kept on saying before, it should be higher, right? It should be a lot higher. The interest rate you lend to someone for 10 years compared to the interest rate you lend to someone for 2 years should be quite different. But look at this. Look at this. Right now, it is coming to basically, where was this? Look at this. The low here, right? On this day, the low is 0.16%. 0.16%. That's 16 basis points away from zero. So if we think about it, where's zero? Zero is like I've got it on a log chart. So zero is basically here, and the difference was 1.6. We're 160 basis points back in March 2021, right? A year ago. 1 year later, we're now at 16 basis points, right? Above zero. And can you imagine, if it gets to zero, then basically, which could happen really soon, then basically, if we were to update this chart, then we'd be like back to 1.6, 160 basis points, then back to zero again. And like it's done every time, we're very likely to see another gray bar, right, somewhere here. So what we're looking at, end of 2022 or mid-2023, US can easily have a recession. And if that were to happen, then basically we would be looking at a yield curve, what's called a stagflation in the United States. It's not just going to be a recession, it's going to be stagflation, as we've explained many times. And by the way, this video is going out to my Discord first, and then I'll post it on internet a few days later. And people in my Discord are familiar with this. I've been talking about it for a long time. Stagflation is when the United States basically, or anywhere in the world, the economy has inflation and stagnation at the same time. Stagnation means you're not growing, it means recession. And inflation at the same time. And this is really terrible. It only happened like once in the last 40, 50 years, and that was during the 1970s. That's when in my last couple of videos, I talk about what happened during that stagflationary period, because that's what we're about to have in the United States. Now, when that happens, the Federal Reserve is going to be boxed in, and the Federal Reserve would not know what to do. Basically, usually when inflation happens, it means they really want to cool it down. Right now, inflation's at 8%. I bet this month on say April the 10th, when the March CPI comes out, it's probably going to be something like 9%, even 10%. And that is just unbelievable for the United States, like 9-10% inflation. They want to keep it to 2%. So the Fed is going to raise interest rates really quickly to try to hammer the market, to try to hammer the economy, to try to get inflation down. But you know what? It's that's of course going to kill the stock market. It's going to kill Bitcoin. It's going to kill so many things. It's going to kill the property market. And they're going to QT really hard. Quantitative tightening. We've explained that in the last video. So here's the thing. This is, we can already see that recession coming. The message is, when that recession, this is what they think the interest rate for the Fed funds rate, or the Reserve Bank of America interest rate is going to be for the next 2 or 3 years. This is how the market is currently pricing it. Now, see how we're here right now, right? We've only raised rates once. So basically, we're kind of just below 0.5 right now. They think we're going to raise very quickly to about 2.5, and that's what the Reserve Bank has said. 7 raises this year, right? May not be so much. I don't think the market can take that much. By the time we get to October, we've had 4 or 5 rises. I think the market's had it. Market would probably puke. But in a theoretical situation, the market is saying, everything's fine. The U.S. economy is going to be fine. And then it plateaus out, and see how it already starts heading down by 2003, right? By third quarter of 2003, first quarter, second quarter of 2004, it already starts going down, which means the market is saying as well, the economy is going to be in trouble around here. The economy is going to be in trouble late to 2022, early to mid 2023, and then interest rates are not hiking like what the Fed is doing right now, but actually falling. So basically, what you want to do, and this is why this is important to get ahead of the game, is because what you want to do is, many people are disappointed when I tell them we might have seen the top for this bull market for stocks and crypto. It's entirely possible. I'm not saying it's 100%, but I think it's probably 50% or higher probability we've already seen the top. And if maybe even larger than that, maybe 80% chance we've already seen the top, unless something drastic happens and the Fed raises rates again. Cuts rates immediately again, like a black swan event, like a massive war, or like basically the COVID gets really out of hand again, something like that. Like what we just saw was March 2020. So basically, it's, unless something like that happens, the U.S. Federal Reserve, the U.S. market is essentially probably, for crypto market, probably has seen the top. And many people are so disappointed, and they want to argue with you, and they say it's never going to 20,000, Bitcoin's never going to 20,000, and they take it so personally. Basically, I'm just trying to trade the markets and profit from the markets just like everybody else, just like all of you. I don't make money by talking out loud and getting angry and talking about my feelings. I feel like the market should go up, or I feel like the market should go down. If the market go up, I long the market. If the market goes down, I short the market. And if the market crashes, then I really go all in, and I try to catch the bottom of the market. So the thing is basically, this is actually a God-given opportunity. It's actually once in a 5-year opportunity to actually really, really get rich. And that is basically to wait for the market crash. Of course, there might be one more leg up. It may or may not take out the old all-time high, but there's probably still one more leg up, one more pump, one more bounce before it all goes down. And if that happens, great, we catch that wave. If it doesn't take out the new all-time high, then that's fine. Short it on the way down, or just wait, right? By 2023, late 2023, chances are we're going to be looking at crypto, Bitcoin stocks, all in a lot of trouble. And if they are in a lot of trouble, that's when everybody's going to be scared. That's when everybody is going to be in a recession, or everyone's talking about a recession coming. And if everybody's scared, no one's investing. That's when I will be saving with a lot of cash. That's when I may not be going all guns blazing, FOMO in right now. But during that time, when, say, Bitcoin is at 23K, 20,000, maybe even below 20,000, I can't promise where it goes, but I think you can see that a recession, I've just shown you a recession is likely coming, and it's stagflationary, not just recession. The market is going to go down quite a lot in the next, 6 to 18 months. Get ready for it. That's the time when Ethereum is going to be so cheap, below 1,700, Bitcoin 20K, around 20K, or even below. NASDAQ, like another 30% lower from here. Standard SP 500 goes into bear territory, 25% down from the top, 30% down from the top. That's the time to go in and buy up as much as I could and make the fortune of a lifetime. I've done that during the GFC crash, and that's set me up, and that's why I'm living in a comfortable environment like this, and I have the free time to talk to you guys, and I think that's what I'm excited about. But people get so offended. People are like, it's never going to 20K. They want this bull market to keep on running and keep going. That's because a lot of the guys watching YouTube and a lot of the guys watching, especially TikTok, it's a very young platform. A lot of the guys are so young, they never know what the .com was. They never experienced the 2000 .com crash. They never experienced the 2008 GFC crash. They only got into the markets in the last 3 years. And it's basically they've gotten used to markets just going up, and up, and basically, especially the stock market, especially there might be a very quick V bottom in Bitcoin and 60-70% crash, but Bitcoin always comes back, like they always like to say. It may or may not happen. You're only looking at a 3-year history of Bitcoin. So basically, I'm saying that if it pumps for another run up, I'm going to be updating it. I'm going to be watching it, what the market does. If it does another big bounce, then we try to catch that bounce. If it does, if it tops out within the next 6 to 12 months, that's great. Short it on the way down and try to catch it all. I'm going to be, keeping lots of cash on the side as well. Get ready for it. In a year's time, in 1.5 years' time, 6 months' time, that's when the opportunity to go all in and basically make a fortune and set up for the rest of your life. Most people don't understand this. They get really emotional when I tell them there could be a crash coming, and people are weird. Like they wanna catch this blow off top. I guess so. It may or may not make you rich. Most people don't catch it. So, but either way, I'll be updating, and hopefully, best luck to all of us.